let me switch conversation. Let's bring on board Manav Chopra, Executive Director, Nuvama Institutional Equities, to talk to us about how he's viewing markets. And you know, the first line of your note, Manav, kind of sums it up. You're saying that markets are approaching key intermediate lows. They can stage a strong rally of 7 to 15% in the next 3 to 6 months. That's what you're really penciling in. Talk to us about what's keeping you so bullish. 7 to 15% will be a quick spike over the next 3 to 6 months. What's the confidence level? What's the probability? And how and what are the cues you're looking at which is keeping you confident of this move?
Hi, Harsh. Good morning.
Very good
Thanks
morning.
for having me. Firstly, the markets have really rewarded us in a very quick span of time in the recent few sessions. But more so, the structure of the markets in the longer time frame has been bullish. I don't believe into the perspective that we were into the bear market. For us, it was more like an hibernation phase that the markets was going through, and we've seen since 2012-14, where the markets usually have been into the hibernation phase for roughly 6 to 7 quarters, and we were almost in that scenario. And uh, along with that phase, there were so many perspectives on the long-term scales which entered oversold scenarios. The breadth was very weak, and the structures came to a point, it warranted for a very contrarian bet, which we run into our models. And basis on that, we came to a conclusion that, we have come to a scenario where the risk reward is very, very good, at least on the medium term, long term perspective, because whenever we've done the back test of those models, the initial 3 to 6 months is where, we see a massive burst of a rally which largely emerges. And obviously, when we were looking at the global perspective, things were really looking like a normal course of an intermediate correction and not a breakdown. So, there are few instances where, in the recent rally, where the India VIX actually stopped closer to 30 VIX, historically, that is a scenario where also we see, intermediate correction takes some bit of a pause. The crude actually did not make any new highs post 2nd of March. Even the US markets, post COVID, the US market VIX always has been in a range of 30 to 34, and they also started to see a rebound rally very sharply and managed to close above 50-day average. So I think a larger context of not only the Indian markets, the global and the scenarios that was playing around gives us a very strong confluence that from here around the markets will turn around, which has actually started to happen in a very short span of time.
Interesting. Manav, hi, morning. So go all in, or would you say, get in systematically, as they say it in this market?
My case is that yes, we have to be more aggressive. There is no second thought of it. History has always said something that the initial rally is always a very surprise move, where there is always confusion whether it's a sell on rise or you wait for an opportunity to buy. But I think the usual first attempt of a rally is where people are really taken by surprise. It usually doesn't give you that kind of a scenario to even think of entering. So it's people will start chasing the market once you see 24,500 or somewhere closer to 25,000. Also, the USD INR has been quite supportive with the RBI interventions. I think keeping all that context, my sense is we are quite aggressive in terms of the deployment part of it, and that's how we are definitely going more aggressive into with the interactions. But the perspective is that this scenario this time around will be more on the beta side. The small caps will come out very strongly in the next coming cycle that we are anticipating.
Yeah, I mean, you seem to be, you just gave me a very good cue. I wanted to understand whether mid-small is the better place to be at this point. Is it the large cap? Because this call of 7 to 15% is on the Nifty 500 basket. I'm trying to understand what will outperform even that.
Fair. So on the similar context, I think biggest upside that we are expecting in terms of the alpha movers is going to come from the small cap space. I think this segment is more or less done with. We don't expect any meaningful downside. Yes, there are certain pockets which have actually bottomed out, and there'll be few other segment and sectors within the small caps which will bottom out over the period of time. But within the small cap or as a mid theme, I'm very constructive on the infra capex as a theme. And this is where the broader market scenarios will see a larger alpha movers coming in. When we are looking at the cap goods or the Nifty energy, the Nifty infra as a space, it has multiple sectors within it. But my sense is the capex infra theme will be the leader going forward. And within that space, Adani as a group, names like Adani Energy Solutions, Adani Power from the large cap Adani Ports. This is where the larger alpha play would be coming in the next few months.
You know, that's exactly what I wanted to talk to you about, Manav, because, your sunshine sectors list is pretty heavy on infrastructure. Is this a structural bet or more of a sort of tactical defensive approach?
No, this is more like a structural medium-term, long-term bet. My sense is that this should be played for the next few cycles ahead. When we are looking at the broader perspective, the Nifty Infra Index witnessed the highest outperformance of the ratios was in 2008. And obviously, within the infra as a space, Reliance is the heavyweight space. But I think the broader alpha would be made into the side themes within the infra as a space. So I'm quite constructive when we are looking at the long-term charts of the Nifty Energy or the Nifty Infra as an index. There is a bigger play which would be emerging going forward, and the consumer discretionary would be laggard. So, I think the capex theme and the infra theme would be the next emerging leader. And my sense is that this could be one of the early outperformers, and this trend will continue at least for a period of 6 to 12 months.
Okay. Manav, specific picks. Let's talk about stocks. You've spoken a little bit about your capex players. You've spoken about some Adani names which you're bullish on. What are the other sector stocks which are looking attractive? And what are the kind of returns that you're penciling in over the next 12 months on some of those counters?
Fair. One of the cases is that when we are at an early stage of a sector mover, sometimes targets becomes a very limiting factor. I think something that I had voiced last year for the PSUs and the metals. Yes, definitely there will be visible targets that we are looking into, but my sense is names like an Adani Group could possibly be a base case of 20-30% in a very near term, but you should be open for much higher rallies that could emerge. I don't want to really give a much higher number just to make it sound very interesting, but yes, we are keen to ride it for a larger period of time. Besides that, names like a BHAL, ABB, they are all looking very well structured. They have been witnessed a complete selling absorption in the recent fall. We have seen a higher accumulative scenarios, and most of these names are well positioned for moving towards its previous all-time high. So, BHAL, ABB looks really good. Within the hospital space, Apollo Hospitals is another name which is very well positioned. I think this could be one of the leader within the hospitals, which is also part of the infra pack. So, these are the broader spaces that we are looking very, very constructively. And within the tire space, it's, the tire as a whole with the anti-crude trade is also another theme which is likely to emerge as one of the outperformers in the near term.
But Manav, both Apollo and Max aren't cheap stocks. So is this more a safe haven strategy?
If you look at the hospitals as a equal weighted index, the larger trend for the space has been quite constructive. They have been in a larger long-term uptrends. My sense is from at least looking at this long-term perspective, they have completed its one leg of correction, which was also in terms of the time and price. And eventually, these would be one of the leaders within the healthcare, specifically the hospitals would be where you will see one of the emerging leaders to emerge. So for me, in good markets, obviously the valuation part would be taken care in the separate angle. But, this is a scenario where we would want to be more constructive, at least riding one of the emerging leaders at an early stage.
Talked about the crude sensitivity with tires. I want to talk about Asian paints as well. At 2200, 2100 thereabouts linked to crude, do you take that call right now, or do you wait to see where crude stabilizes and then perhaps jump into such crude sensitive names?
if you just look at what's happening with the crude, the crude peaked out on 2nd of March. That was roughly at $118. And post that, we've seen so much of escalation already happen in terms of the news of the to and fro of environment. But I think the market has sensed something a little beyond than that. It has come into a broader range. And, this is a time where you take some really strong tactical bets into the anti-crude trade scenarios. Obviously, for me, Asian Paints, since I say I'm quite conservative or not very progressive, at least on the consumer discretionary, but Asian Paints could be one of the tactical scenarios to be played. It could be one of a short-term, medium-term trades, but nothing very constructive on the long-term basis. Yes, it has come to a point where can be evaluated for a trading rally towards 24,2,500, but I'm not very constructive for a more larger run, at least on that perspective. But yes, I think the tires as a segment, which has been a part of the old economy, is largely going to participate very well going forward, which was they did not do very well in the previous two bull cycles, and I think they will come back very strongly.
Manav, lastly, some names within the financials pack that you're bullish on. Are there any?
Yes, so I think one of the key triggers that made us very comfortable was the financial as an index. It has been in a larger uptrend. There is no second thought to it, and the recent fall really shook a lot of the short-term environment of the markets. But from here on, I think the financials more or less is kind of basing out in a very positive environment. I don't expect a very runaway rally, but yes, it will be a very sector and a stock specific kind of environment to start. But within that space, I'm very constructive on Axis Bank within the private bank space. I think this is definitely due for a very, very strong run up for the near term perspective. And I wouldn't be surprised, the stock in the next few months would be moving closer to the levels of 1600, 1700. And this could be one of the leader of the packs within the private banks. And if I just go forward, names like an SBI Life, Union Bank are other top picks. So I'm quite constructive on financials, but I think it's going to be more like a stock pickers within the financials rather than the entire basket as a whole.
Very interesting. Manav, great to have you today on ET Now. Thank you so much for your time.
Thank you.
Okay, on that note, let's wind it up right here on this edition of The Market in First Trades. It's a goodbye from Harshit.